in terms of announcements. We've got RBA, we've got BOE, we've got ECB, and of course we've got NFEC, formerly known as NFP, at the end of the week. So it should be a week of moving. We should go one direction once I entered the market. That'd be good. But tiny bit of frustration creeping into this on-off scenario. That is wax on, wax off with the market sentiment. Well, certainly the way I'm reading it anyway. One day it's risk on, one day it's risk off. And there doesn't seem to be any commitment really fully from the sentiment of the market. And that is a little tad frustrating when you're trading risk on currency versus a risk off currency, which I have been attempting to do. And again, this week, well, today, in fact, we've seen a reversal in Aussie Yen. And I'm now out of that trade as I was last week when I got out of this trade as well. Break even. Frustrating, very frustrating. And I'm not sure where we go from here right now, because it does look as though we want to come back into this rangy area. And if that's the case, guess what? I'll be looking for higher lows to trade it up to the top there. But it does look to be a risk on scenario that we're seeing today thus far. And all through the day, the Aussie has rallied against the yen, against most currencies, to be fair, ahead of the RBA meeting tomorrow. Now, I was hoping that I could be free trading this, and well, we were, but we're no longer doing that. We'll just have to wait and see. If we break down again and I get another setup, guess what I'll do? I'll trade it again. Not making much money at the moment, I've got to say. The market not being that friendly. But what we are doing is we're keeping our capital intact, and that's very, very important when the market's not doing what you expect it to do or want it to do. Isn't that most of the time? But when it's not doing what you expect it to do, it's a very, very good idea to keep your money safe. And that's why I trade the strategy that I do, because most often, if we're actually not getting the momentum that we need to drive us into full profit, we're getting back out without any damage. And though it is frustrating not to be banking, it is satisfying not to be losing money. So it's a trade-off. It's always a trade-off. Righto, so no deal on Aussie Yen, back out of that at break even. And now we look to pound US dollar to see if we can get a breakout trade here. Now, I don't mind the range because it's pretty tight, but I do mind the obstructions that we have dead ahead of us. So if we were to trade this long, we've got not only the weekly pivot, but this former support level back here, which is pretty much on the highs of the resistance area as well. Bit neckline-ish there, yeah, I get that. But the risk involved here to go long is far outweighed by the potential reward. So it's a no from me to go long, certainly, and to go short, which would be underneath this candle here, or you can see the problem with that as well. If I expand that just a little bit further, you can probably pick up another area of support underneath here. That's a fair way away, to be honest, and you'd have profit in the bank. So I kind of get that. I kind of get you could go short here, but you've got to take that on, and that's not something I like to do. We've got a hint of an ascending triangle here as well. Not that means we're going to break long. I don't subscribe to that theory. I rather think that it's just a structure, and as all structures do, it will either bounce and go the other way, or it'll break and go that way, or it'll break and be false and come back and go underneath again. So as always, that's what I'd be looking to do. But I don't see a clean break here because there's no fresh air. All I can see is resistance and support underneath. The support is weak. I'd have to say that. So if I'm favouring anything, I'm favouring downside. It's against the US dollar. Let's take a look at the dollar index. The dollar index has almost reached the area that I wanted to go the opposite direction. In other words, everything that's been trading short against the dollar, Aussie, Kiwi, pound, euro, CAD to a degree, all of those I'd be looking, once we get to this level here, I'd be looking to buy those. Now, it has happened today thus far, and I was looking for this scenario. As I was telling you earlier, the Aussie and most other currencies against the dollar have indeed had a reasonable day thus far, none better than the Aussie. And if I was a scalper, and I'm not, and I mentioned this in my preview this morning, would have been a good place to scalp the market right there. And the reason for that is pretty clear. That level, which is pretty much bang on the the 70 cent mark for the Aussie, quite substantial in its support and or resistance for the market. Always the 70 cent mark. So this time is probably no different. We should get a bounce off this. I'm not sure how far that will go in the first instance. Maybe this little area here that I've got, that's the monthly chart I'm looking at. So I'm probably thinking up here somewhere. May take some time to do this. A lot will depend on what the RBA does and says tomorrow. If the RBA happens to say, all right, should I use the W word? Wrong. This inflation stuff is serious, and the numbers that are coming out of Australia are quite substantial, I've got to say. The economy is looking robust, and all the economists are talking it up at the moment locally. So I see no reason why the Aussie can't rally, but the dollar is extremely strong, and I'm not sure how far this can rally, to be honest. If it does reverse, then I've got my own little method of finding where that will reverse to, and the symmetry that I see over here, or the left-hand side of this symmetrical line, if you like, or the line of symmetry, that's the word I was looking for, should see us. Hello, buddy. It's Monday. You got a trade, haven't you?
There's a trade on the FTSE. Yes, there is a trade.
He's all rugged up.
Yeah. Sorry about that. Let me do this then. Oh gosh, actually, you're going to be a bit better off than I am. The trade is for a long. I am already in, and there's the trend line there. So should hold here. Now, if you are going to be using stops, this area is probably giveaway area. So that's going to be about 10 pips from where you are now. And you're aiming, well, I'm aiming for this point here, which is probably about 20 pips. So there's a little 2-to-1 on the FTSE. Now, if we bring in, can we bring it in? Let's bring that in and get rid of this for you guys. It's not so confusing, but you can see here that there's a daily pivot here, and that should hold. Now, if it doesn't hold, then I would have thought we're probably going to come down lower, but the actual long looks okay to me at this particular stage. So you may well want to wait. I mean, it depends on everybody's taste, but this is a good area. You know, I came in a bit early because when the market was coming down, I was hitting and it didn't trigger straight away. I think I've got a little bit of a delayed internet with this. I'm still on the laptop and it's not quite as crisp as it should be on clicking the buttons. It sort of seemed to take a little while to get through, and by that time it had hopped up and got me in where I didn't want to. But it doesn't matter because I'm still aiming for this point here. And if it breaks down, then I'm going to aim for it a little bit lower as well. And the reason for that, now there is some issues. There's no question that we got issues with the markets right now. See how it's a bit delayed. This is not working out that well. But you can see there's a weekly pivot down here. That's my second entry. So it's quite a way between this point and this point. So I'm going to leave it plenty of space to look for upside if this one fails. Which is going to be around about 60 pips, and I might even take a short into that area there if the market looks a bit weak. But it is for a long right now. I still think the FTSE's got some a chance to go higher. I won't do the full analysis now. We'll get back to it later, but just to let you know, mate, that there is a long trade on the FTSE. if anybody's interested, and you might want to use a strategy where you at least see a 5-minute bar of buying before you guys buy into this. That's just not the way I play it, but you guys might want to do that, which would probably be better, because at least that let you know this is going to hold. But it's there anyway, mate. So do with that information what you will.
Right, bud. Thank you very much indeed. Looks like it's a bit chilly over there in Brighton this morning. You got your hoodie on?
Yeah, it's a little bit chilly, mate. It's not as chilly.
Or is
as
that the back of your chair? It's not a hoodie.
No, it is a hoodie. It is a hoodie. Yeah. It's not as chilly as it should be. You know, this is the thing. It's still a bit strange. You know, that this time of year should be a lot colder, and there's some strange things going on. I don't know if you saw overnight, but Patrick Mahomes actually lost the AFC Championship match after being 21-10 up. I mean, I couldn't believe it. I could not believe it. They are not in the Super Bowl, which I'm gutted about, because they're not my team, but they're the best to watch, and I wanted them in it. So they're out. Rafa Nadal, he's just become the most successful tennis player in the world by winning.
That was a pretty amazing comeback, wasn't it? Hey?
Oh, again, you know, just some sporting history made, I think, yesterday.
Often does in Australia, mate.
Yeah. No, I'm just going to double check this if I want to take on a short as well. But no, that's all right. No, I'm leaving this, mate. I don't really care if this comes down. You know, sometimes it's worth taking on the short, but I'm a bit concerned about taking on a short here, because I think it could flip before I want it to. But I am going to put in another position down here and aggregate it. So I would not get into this now if you're trying to get into the upside from this point. Doesn't look like it's going to hold. Market still looks okay to me. So if it does come out, I'm just going to look at it as a bit of a flush down, and then get some orders in down here. I'm okay with that.
All right, bud. Happy days. I was just going through Aussie versus the dollar, and I kind of was looking for a long here, not so much today, because it would have been a scalp without a real reason, or a candle pattern or a chart pattern to set me up. But let's keep going with that, because I'm still looking for it. And
oh yeah, what scalp to the upside for the Aussie?
Yeah, well, that's over. It's done. It's gone.
Oh,
but it was pretty clear that if you are a scalper, then would have been the time to take it. And the reason, of course, is simply technical. We're at a very, very strong support level. It's not just, recent support and resistance. It's also the 70-cent handle, which is kind of, I won't say it's perceived as fair value for the Aussie versus the dollar, because that's probably a little bit lower, to be fair, or used to be. 65 cents was around about the handle for fair value for Aussie versus the dollar. That has changed over the last few years, I suspect. And I think it will change even further over time as that dog dollar actually drops out of the sky. One day it will happen. But at this point in time, it's pretty tough to be trading long against the dollar, because the dollar looks to be on a charge. Now, where that charge ends is very, very difficult to gauge, but its next level of resistance is pretty clear to me. And it's that trend line. That's a monthly trend line. We've rejected it quite a few times, and I expect that we'll get some sort of bounce when we get to that point. We're not there, which is kind of a little bit difficult for a currency like the Aussie. We've got the RBA tomorrow, and that may it probably will have an effect. More so if the RBA actually go back on what they've been saying constantly, that they're not going to raise interest rates till 2024. If they were to bring that forward, and the numbers in Australia suggest that may well be the case, this could force a little bit of an upside rally for the Aussie. Not sure it's against the dollar. There might be limited upside against the dollar, because we do have that strong resistance level above us. But against currencies like maybe the Kiwi, Euro certainly, pound certainly, I think there'd be probably good cause if the RBA does in fact bring their forecast of interest rate rises forward tomorrow, then that's where I'd be looking. Sadly, and Ash, you weren't in the room when I was talking about this, Aussie Yen seems to be Miyagi territory, Mr. Miyagi territory, wax on, wax off, with the market sentiment to me at the moment. And this is the gauge of that for mine as far as currency pairs are concerned.
Yeah.
And although we got into a very easy first take profit here, to come back and taken our trailing stop. So we're out of business again there. Again, no money lost, but nothing gained either. And this now looks like it may well go back up towards, well, monthly pivot won't be there tomorrow, but certainly towards the top of the range. And I'd be thinking the next level to look at for this one is going to be this trend line.
Yeah, that looks good.
So that's kind of target area for me now. And I'm always of the opinion if X doesn't happen, then the opposite of X probably will. And if that's the case, then we're looking at a false break of not only this support trend line or trade line, whatever it is. I can't remember what it is, but certainly the range as well. The range is a bit ugly now, I've got to say, but it's still there. There's also a resistance trade line here. So a retest of this area and a higher low does get me interested. And there's an obvious target there that I'll be looking at a little bit down the track.
It kind of looks, it looks like a lot of the market actually at the minute, doesn't it? Where we've got this kind of risk on because of the technical level that we're at. You know, a lot of these are very low, but there's still this kind of overhang in the market that it doesn't seem to want to buy up right now. Nasdaq's very similar to that. I look at the Nasdaq and I think Nasdaq should be buying up, Aussie should be buying up. I mean, these are risk on kind of instruments and products, but there's still this kind of overhang of, is this the time to do that, you know, and what kind of joy you're going to get out of this at this particular stage. I'll tell you what, mate, Aussie and the Kiwi very good on COT and seasonal currently, and they have been for a little while. Yeah, and I think given where they are, particularly the Aussie, you know, given where it is on this support level, it certainly would suggest that that it's got a decent shout to you know, at least get some upside.
Yeah, look, it's one of my things this week, but I've got to see that higher low now. But the dollar index is just a little bit away from that resistance level. So I think we may have to be a little bit patient. That's all. Not for long. I think if we do get to this level, then, as I said before, I'll be certainly looking to trade the Aussie long. And I think that's probably the pick of them in terms of versus the US dollar. Maybe this is
one of those periods, I think, where you kind of look at it and think, if the fundamentals play out the way they currently are stated, how can you go short things like the dollar as an example? But
totally.
but the technical level suggests that that's exactly what should happen. And I wonder whether we might get some floating along in an area before the reverse, rather than actually just getting out and out reverse, which you know, that may well fit with people just waiting. Is there going to be the 4 or 5 rate hikes that they suggest, or is there going to be something down the road which could change that? We float along in this area, they don't hike 4 or 5 times, and then we start to come down, or whether it's going to be something else. But I would say this is probably a genuinely tricky time to try and ascertain a reversal.
Yeah, but gee, they're good when they come.
Yeah,
and look, we're on the cusp on the Aussie in particular. I quite like this for technical reasons. You know, we're actually, since we hit this 55 level or something like that, really this has been in pretty good shape. If that's a retracement on this move, it's taken a long time, true, but gee whiz, I can see this happening. I can totally see that happening from a technical point of view. So yeah, I'm an Aussie bull. It's going to be tricky to get in, as you just said, and as I said, the dollar is very, very difficult to trade against at the moment because everyone is anticipating these interest rate hikes from the Fed. So it is tough, no question. But you know, I think if you just follow the rules that you have for your trading system, You'll be okay.
Yeah.
So that was number one on the watch list. Number two on the watch list is Cad Swiss. Now, and again, Aussie Yen, Cad Swiss is not much different in terms of market sentiment here. But I don't see any reason from a fundamental point of view why the Canadian dollar should be weak. I really don't yet. It's not going through the roof. And I don't quite get that. But like I always say, if it's not happening, then something else is. And I'm therefore willing to look or entertain the fact that the CAD can actually fall. That would really mean, against the Swissy, in my humble opinion, that we need something in the world to happen. That drives us into a risk-off market. And, well, we're kind of poised there in Ukraine, on the Ukraine border, for something like that to happen. The oil situation is interesting, as always with the CAD, and oil came off a little bit towards the end of last week. But I notice it's looking for the highs again. So I don't see why, from a fundamental point of view, the CAD should not rally, but it hasn't. It simply hasn't. Every time it's tried, it just fails. And that leads me to think that we've got a strong chance of it going in the opposite direction. Now, we have started kind of a mini trend with lower lows, lower highs. This one equal low. But we have hit this strong resistance level once again. And I think we can peel off that. Weekly chart last week was screaming a tops in there. And I said we couldn't possibly trade this because of the monthly pivot. Well, that's exactly what happened. And it bounced straight off it. Yet it didn't take out the highs and it didn't get back above this level. So this is still in play as far as I'm concerned, this big rejection here. Lower highs in this vicinity make for anticipation of shorts. And we've got a double top followed by a lower high. And here's very ugly trying to get in the market, to be fair. I've really got to see a false break of something. And right now, I can't see that. What I do see is we're landlocked in between this month, which has got 1 day to go, right? It's not there tomorrow. We've got the monthly pivot and this strong trend line that is holding price up, not to mention that horizontal level. So I think another lower high in here or a break back underneath here and retest it. That sounds better to me if that were to be the case. Even on a smaller time frame, I'm seeing double top, lower high here still makes sense if I can get some profit in the bank before the daily pivot. So maybe this candle was of interest on the 4-hour chart. We might come back and revisit that a little bit later. I did place an order. By the way, mate. Okay, sorry, George, I'll be there in 2 seconds, mate. I did place an order short pound yen this morning. Did say it was probably a bit early. Our entry is under this bar here. And I'm actually not displeased with this for the very same reason that I've just given you on Cad Swiss. I really like to see a resistance level broken and proven wrong. So if this can get through this level, through this trend line, it actually gives me a far better lower high than was this candle here. Yes, it was there. Yes, it was coming off the weekly pivot. Yes, I've still got an order there. But if we get a close above that trend line, I'll certainly cancel that. I'll be play that as a false break of resistance down the track. Still think it looks good. We're back inside that range, which is more evident if I go to weekly chart.
I like that, mate. You know, I look at the pound and I think that there might even be a little bit of over exuberance for the meeting this week. The Bank of England are talking about going 3 times, but they might be a little bit more measured in their rhetoric to do with inflation, where the Fed seem to have gone, ignore it. And I think the reason they've done that is they're trying to front load it, you know, so they can kind of do all their bad stuff at the start of the run, and then when they don't raise quite as much, then the market gets some relief. Whereas I think the Bank of England might be a little bit more, you know, I wonder whether that's their tactic. And I've heard a few people.
You know what? The Americans are like that. You know, they're bold. They're absolutely front runners, whether they're right or wrong, as you said. And they tend to want to correct after they're wrong, rather than, okay, let's be cautious and not do what can be wrong.
Right.
That's
Exactly.
kind of the way they're bold and front runners. And
yes.
I think that's probably, and we saw that last time, right? After the GFC and after Trump. We saw that last time.
Yeah, we did.
Where they just went bang, bang, bang. Oh, hang on a minute. Maybe we've gone a little bit too fast, and then pulled it back. So it may well be the case this time as well.
Yeah. I mean, I suppose that's the thing, haven't they? They've got form. Whereas I wonder whether the UK might be a little bit more measured. And even though they say, what, we're going to be raising interest rates, but we're going to watch the data or something like that, that might actually weaken the pound a little bit. I think that there is probably enough priced in for, as many rate hikes possibly as the US to suggest the pound could ease off a bit. But I might be completely wrong. I've been thinking this about the pound for a while, that it's been a little bit overbought. You look at it against the euro as an example. Euro's a heavy line of support. So I've been expecting a bounce in that for a little while, and it just hasn't come. So I could be way off.
Yeah, I know. I've been looking to trade it myself.
Yeah. I mean, will it come? I don't know. But
anyway, we'll come back to that.
Yeah.
I'll just leave you with this one on pound yen. Now there is a tight range in here. It's far tighter than I've got, and it's probably in there somewhere.
Yeah.
And when I look at that, I see one little, two little, potentially three littles, not there yet. That hasn't come back into that range. But if it does and retests that, this is breaking to the downside. I've got no question about that. But we're not there yet, obviously. But from this point, any lower high in here is going to attract my interest for sure. I think this is destined, maybe not right down to 133.48, but I'll be looking to stay in it for that length of time. It's a long way away, but let's see. 1 year older and 2 days. Gorgeous George has joined us, and mate, I noticed you're inside today. You were out in the lovely countryside yesterday. How are you?
It was absolutely brilliant, and I had to apologize to Mapule, that's my wife, because I had promised her that I would organize and arrange myself so as not to work. Lo and behold, my alarm goes, TTR recording. I'm like, oh my goodness.
Best laid plans, they say.
Well, fortunately, she'd carried, we're in a mountain resort, so they don't have much comp, but she'd carried, my laptop for Netflix. So at least I could get on and do some recording there. That's why I was out in the bush.
It all worked out in the end, mate. All worked
absolutely. Very good.
What's going
on? Well, today is end of the month, and it's always an interesting time to get all philosophical, with myself. There's a few things that I look at. It's the month, firstly, historical. The month has gone past. Was I 100% right 60% of the times? And if I was, I'm a happy chappy. And this month was interesting, actually. I didn't trade as long because I came in late and, because of the first CNA holiday. But I managed to trade, so pretty happy with the results, more than 60%. So I don't bounce up and down, when I get to 60%. So I'm comfortable with that. And that also feeds into what I do on the last day of the month. I don't trust myself to trade when I've made, when I pulled money out of the market, when I've extracted wealth, as I say. So I'm not executing trades today. I don't want to mess up that record, so I'm keeping that as it is. So that's decision number one. Then
before you go on with that, mate, is that a golden rule on the last day of the month, or is it a rule that if you have, what if you're a bit down 2%?
If I'm down, I trade, because I'm funny enough, I'm calmer when I'm down than when I'm up. When I'm up, I'm invincible. I want to just keep going, and I've learned. I really can trade up to the wire on the last second if I'm down without panicking or trying to do foolish things. But if I'm up, I tend to get foolish.
That is interesting. Do you know, George? Are you a big journal maker? Is that how you know your month, or is this just something you'd be keeping track of mentally?
I journalize. So here's what's happened with my journal. I don't know if you recall, I spoke about it at length, some time back when we met in, was it Singapore? I think we met, one of the last. And I literally used to record every single trade in a hard copy book and all my thoughts and emotions. But now I don't do that. But what I do is whenever I finish trading on the chart, I go into it. And if there's anything that I did that's outside, call it an acceptable band, I make note of it on the chart and I just keep a file of it.
All right.
Yeah. So it's a kind of journaling, but it's not as detailed as it used to be, I guess, because I've done it for so long. Now I'm looking for variances out of the norm. Yeah. That's when I start to pick up some of those behavior traits, which is interesting because I really take a lot of time to just work on my mind.
And do you at the end of, like on a day like today, would you go through your January's log and okay, on the 1st of January I did this, and and did it improve? Is this something that you will do today?
I do that. So that's my work today.
That's good.
As boring as it is for me, that's part of the business. I've got to do that. And it also helps me, so one is on what's going on in the mind. Also, then the other one is looking at the actual execution. It's one thing talking about it. Was I disciplined? In taking my trades? Did I take every trade that I should have taken when it appeared? If I didn't and I was in the market, that's problematic because then something was going on. Whether I got greedy or I got panicky, whatever, because I have to take the trades. That's what if it's set up, take it, because you don't know what's going to happen. The moment I start hesitating, that's a problem. I have to go back and fix and say, why are we not executing the trades?
Yes, that's a bad space to be in. Absolutely.
Yeah, So it's ratifying the actual strategies. Then the other thing is probably easier than everything. Clean out the charts, put up the monthly charts, almost like you're doing some of them here, and refresh on the key levels of support, resistance, measured moves, hidden, etc. Because as the month unfolds, I tend not to go back to say what's happening on the monthly. I just want to see it coming up into view, then I know it's there. So that's something that I spent today doing on all the 7 charts that I trade. And then money management, that's another key part. So I go back. That's probably the more difficult of the assessment, because I'm now at a stage where with my money management rules, I'm now comfortable to go in and take trades, first trade at 3%, right? And I can split that into 1-1-1, whatever the case may be. Now, that's come up from a formula that I keep saying, Gillian is one who referred me to it when I was talking to him about just some trades. Ryan Jones' book, which is pretty boring to read, but it's really worthwhile going through it, trading by the numbers. But within there's a little formula that he uses, delta, blah blah blah. But if I grow my equity to a certain level, I'm comfortable to start off by trading 1%. But if that equity, that whole pool, grows to a certain level, I'm comfortable to take my first trades as 2%. And if it grows to another level, I'm comfortable to take them as 3% and all the way up to 5%. That's kind of where I want to get to. But the other side of it is if I start getting drawdowns, how quickly can I decelerate from that back to 1% before I start losing a lot of equity? So I've got to I work on that. The globular one is pretty easy to get to because that's preset. If I get to this level, then I can start trading at 3%, etc. But then there's also paired trade, which is a little bit more interesting. So if I take that first trade in the day at 3% and it goes my way and I'm able to lock in, not in my head, actually put the stop into the market, and I have a 1-to-1. So I have banked 3% for the day. If I see another setup, I gotta be comfortable enough to put in 4%. Okay, because if I get stopped out, -4, I've already banked 3, I'm on -1, I gotta be comfortable enough to keep trading. Now, all that ties in back to the psychology issues why I go back, say, why haven't I taken the trade? Or why am I taking trades when I shouldn't have? Because that's the only way we're going to start to pull out a lot of proper good money from the market. So the money management, I mean, there's just Excel spreadsheets and thinking and making sure I'm very comfortable with it. So that's today's work. So when we start tomorrow, all that's pretty clear and we get started. And again, like I said, drawdown. If I get hit by drawdown, first trade -3%, I'm comfortable to take that and keep trading. If I get hit again, immediately I go back to my spreadsheet. Okay, decelerate. You gotta go back down to 1% until your equity pool grows back again. It's those dynamics that I have to now work on today. And once I'm clear, tomorrow we start again.
Fascinating stuff, mate. I mean, how different you are to Jeff and I.
Yes, indeed. You're a disciplined man, George.
Yeah, well, I really like the scientific approach as well. You know, it's very it seems to be very rules based and very evidence based as well.
Mate, did you want to share that book again?
So the book is by Ryan Jones. What I'm gonna do, let me post the quick link on the chat.
That'd be good.
Just so that guys have got that.
I'm often asked what books, and I must have probably, I don't know, maybe a dozen trading books in my bookshelf.
Right.
I've never finished one, never. I'm hopeless.
The problem is, I think, with trading books, and many books actually, there's only a few nuggets in there that you really need. And the rest of it is just kind of, I don't know, more and more just little stories that kind of like back up the 1 or 2 bits of evidence and 1 or 2 bits of information that you really need. These books have got a lot of fill. And that's probably why you're not finishing them, mate. I don't think it's down to much else than that. People don't really, they get to the point, but they might get to the point with kind of going around their houses quite a lot with anecdotes and whatever else. What was I reading the other day? It's a book called Flow. And it's a really good book, but there's so many anecdotes in there, and you sort of like think, actually, you made the point in the first chapter.
Yes.
And I found the same. Mark Douglas is the same. Mark Douglas, Trading His Own. Brilliant. But he's got some great ideas in that. But you could probably finish the book in the first 2 chapters and not need to kind of go through all the evidence that he kind of backs up, and all the analogies that he backs up the evidence with.
And that's you're absolutely right. I mean, with this guy, you really have to tell yourself, let me just work through this. There's some numbers that might just cause a bit of a spin, but just work through and grasp the logic of it. And if you have the discipline, then it makes sense. I mean, if you start to think about it, if you prepared, when you take that first trade, you prepared to lose 1%. It really means that you should be prepared to lose 1% for the day, right? So if you've locked in 1% and a setup comes up that works for you, put in 2% because you still have 1% up, put in more. But don't do that if you don't have the discipline, because then
which really means you shouldn't be doing that if you are new to trading. That's for sure. You need to have a lot of certainty behind you before you get into that area where you're increasing your risk, no question. But I mean, you're talking about yourself, you're not talking about startup traders, George, right?
Yeah, I mean, and for startup traders, what you really just going to be learning to do is everything that we talk about. Where do I trail my stop? not in my head. When do I actually trail it? When do I take money off the table so that it's in my account? If you master that, then the next stage is, okay, my strategy is clear. I know how to manage my risk. Now, how do I accelerate the returns? You can't start on the other hand. There's so many things you still have to master before you do that.
All right, mate. So looking ahead, do you have any views for the week ahead, or are you just in that reflective mode today and you'll start again tomorrow?
I will start again tomorrow, basically, but I'll just show. Let me just show one, maybe a couple of just.
Great.
Okay. All right. So everyone talks about the euro, okay, whether you trade it or not. But this is currently how I'm looking at the euro. So I've kind of cleaned out a lot of the stuff. Ignore these red and green. This is what I use for my high lows of the day. But just on the monthly, I'm kind of saying, okay, this level low of last year, just poke beneath it, is a very, very strong level of support. There's something else there that is important to notice. You see this lower high double top that we had there. So every time you have that, the bears want a measured move, and we almost got to that measured move. So really strong support at the low of last year. So what I'm looking at when I open up tomorrow's, assuming that we end up exactly where we are today. Okay, so I've just, because it's a Monday, weeklies I'm not worried about. I just jump straight from what I'm looking at the end of the month to the new month. Now I have a look at that. And for me, immediately I say to myself, okay, I know there's a strong level of support that we marked. The bears closed a couple of days ago beneath the low of last year. If the bears were strong, they should have given us a strong bear candle. Okay, because breakout must have followed through, and I didn't get that. Not a surprise because of where we're at. Now, where today ends is critical. If I'm going to go short, I want to see the bulls come back and give me a bounce off the 10 EMA, which I use as an indicator of strength. So I'm really going to be looking to see what happens by the end of the day. If I see the market anywhere within the end of the day with a bit of a tail, I'm going to be looking for to go short, because I'm going to see if the bears can follow through and come back and really bounce off here, maybe accelerate. So it's nice waiting for me. Now, remember, we're going back into a trading range, but now, because I'm now looking at the daily, these candles are pretty important. They failed to break through, no surprise, because of the level of support that we had. But I want to see what happens here. If I get any potential 10 here, then I'm going to be looking to go down to the 5 and take that trade. So that's coming into tomorrow morning. Just one other. S&P 500. I feel quite lonely here because I don't think any of you guys trade this actively, but I'll keep plowing along.
Ash has been known to do that.
Are you trading this, Ash?
Which one? Sorry, I was just
S&P 500, US 500.
Oh yeah, do you know? I think the S&P and both the S&P and the Nasdaq are interesting right now, just purely because of the level they're at. I think it's difficult to make a case to buy them because of the fear to do with the Fed. But by the same token, I think there will be dip buyers at these levels. And I'd really like to see a nice clean head and shoulders pattern formed, particularly on the Nasdaq, and that would mean that it needs to have a rally to get back up to that right shoulder area. I mean, it might be a little bit hopeful because everybody's probably looking for the same thing. They're probably looking at the chart, and it'd be more than telegraphed. But I think a little pop, and we saw it. I mean, the last week's hold I thought was potentially quite significant because it could have broken through, but it didn't. It popped right back into the level. It went below it, and then it's popped right back into the level of the head and shoulders pattern. So I would have thought there's a decent chance that we get a rally on the S&P and the Nasdaq. We haven't raised interest rates yet. That's the other aspect that we got to remember. Will people go, you know what, we can get another month or two out of this. We might be able to squeeze this for another month before we really need to start worrying about profit lines. Earnings season's been pretty good. Apple's earnings were, you were asking last week, Jeff, about Apple. Their earnings were, again, pretty stellar. So, you know, we haven't got that aspect as a problem. So I think a potential long on some of these markets. This is why I've gone long on the FTSE. I still think there's just enough of a squeeze to the upside left before we really start to collapse.
So, I mean, okay. I use a 10 EMA, right, to indicate strength of the trend, but 20 EMA is really going to take those bounces. So if you ever look at this, after this pattern, we spoke about this before, the bulls want to create a measured move that low, that high. And that's kind of where we are.
Interesting, okay?
But we're still above the 10 EMA. I mean, we went beneath it. And I said to myself, if the bears are strong, they're breaking the strength of the trend. And let's see if we close beneath here. But that's not the case. You know, we might just have the 10 EMA, which means even though there's a sign that the bears try to do something, a little double bottom here, the trend is still in favor of the bulls because we are above the 10 EMA. Then
the candle hasn't closed though, has it, George? It has. There's not long left, I've got to say, but
that's still today, right? So who knows when the US inflation kicks in? If the bears are strong, they want to close here. But that's also an interesting level to be almost a double bottom, depending on what happens next month. But it's a 50% pullback, which is a huge magnet for the whole of last year. So the strength will be shown by the end of the day. The bulls are strong, they just want to stay above that.
About 13 hours and 18 minutes left.
Then coming into, you know, if we end up where we are, I mean, we're still way ahead because we've got to wait for those markets to kick in. So whatever happens is going to be a key indicator for me in terms of how I look at that market tomorrow. As it is in a trading range, if you're in a trading range on this time frame, you're going to be selling up here and you want to be buying down here. Okay, so I got to wait and see how we close. Are we selling here? Now, you know, now we're trading 5-minute time frame. Happy for it to come down here again for, you know, another day and go up, whatever happens, to be trading range price action until we get something decisive. If the bulls are strong, then they're going to give us a close above that, but you still have to be cautious, right? Because it's a break above trading range, likely to fail, might still bounce off that. Okay, so initial bias selling off here on the 5-minute. If we get a strong bull case, I want to see how we bounce off that. So just two of the charts. So bright and fresh tomorrow.
I'll tell you what, George, and Jeff, actually, what I quite like at the minute about the S&P and the NASDAQ is that I think they encapsulate the essence of trading down to a T. Both of them are at support, and both of them are at significant support. So a technical analyst comes in here and says, well, what do I need to see to prove this support is going to hold? And the fundamental analyst comes in and says, is there enough kind of fundamental evidence to suggest that this is now undervalued? And because of where we are, I think that this really does, as I say, I think it encapsulates the essence of what trading is about down to a T. You know, do people sort of like come in and say, we're at support, I'm buying? Do they say, we're at support, this is what I need to see, so I'm buying? Or, you know, or the same with the fundamentals? You know, how do they sort of like come up with their decision to buy, sell, or do nothing? But this is an area where they need to make that decision, in my opinion.
Totally. I bet all three of us have got different opinion on how to trade this, right?
Yeah. I mean,
on the daily chart, for instance, you know what I see on the daily chart? I see failed rally potential. See that hammer? 5 bars back?
Yeah.
Why didn't that turn into a bull run? That's the question I ask myself.
Yeah.
And then you've got similar candle on Friday, right?
Yeah, that's Friday.
If that fails again, that's sending me a big signal that there's a downside happening.
Yeah, which is interesting because if I'm looking at this chart, I'm saying that hammer's created just before Jerome Powell speaks, giving it the setup to go long if he says something that the market wants to hear. He doesn't, the next one sells off. However, now all information is known. Last Friday's candle, to me, looks pretty positive.
I love it. That's why trading's fascinating.
I'm coming and I'm saying, well, listen, trading range here, measured 50% of last year, it's going to bounce off, so I'm not surprised. We're all right. Different ways to look at it.
Yeah.
Absolutely.
It is interesting, and this is what makes it trading interesting. And I suppose that's the thing. My first go-to is, can I figure out the sentiment from the next from what is going to happen next, which is pure speculation, of course, probably more speculative than anybody else's approach. And maybe the reason I do that is because I don't use stops in the same way that you guys would use stops, or other people use stops. I will not use leverage, and then if it comes against me, then I'll hedge. But I'll give it some, I can be wrong for a little while longer without that stop. I'm not trying to pick the exact spot. I'm just trying to pick the overall sentiment, which will give me some room to see if that plays out.
Yeah, I mean, I'm happy to speculate if I would be, I hit my 60% accuracy, right?
Yeah, well, this is the thing, mate. I mean, I'm going to be wrong more than 60% of the time, probably, because how do you guess on speculation? Is the only other thing is, in some respects, equities are a little bit easier because they tend to go up. So this is why this particular period becomes pretty fascinating, because we are possibly in that period where we're not going to tend to go up. We've had two years of very, very bullish price action. Is year 3 now going to be quite the reverse of that? They tend to go up. They only need to go up 2 years out of 3. This might be the 3rd year, and we might actually start seeing the bears take control of this now.
Yeah.
One thing's for sure, we'll know more tomorrow and the next day, and the next day, and the next day.
Yeah.
You do now. Yes. George, are you done, buddy?
I'm done. And we'll see the guys on Wednesday, GMT time, 9:30.
0930 GMT.
Yes.
Sounds fantastic. Mate, thanks for coming in as always. Hope you enjoyed your birthday, and we look forward to catching up next Monday.
Absolutely superb. Take care, guys. Ash,
thanks, George. Everybody. See you soon, man.
Yeah, take care. Cheers. Bye-bye.
Cheers, mate. Do we need to go back to you at this point, Ash?
We can do, mate. We can have just a quick brief look at what's going on here with the FTSE.
Okay, then we've got a special guest. We've got a special guest today.
In that case, I'm going to be hyper quick. And the reason I think it's probably worth kind of going back to the FTSE, and as I just said, my whole thing's about sentiment. Why have I got a sentiment that the FTSE should go long here? I mean, the pattern, I suppose, there's patterns within patterns here, but there's a pretty negative looking pattern when you look at this. So why am I keen on the long? And I'm keen on the long because of what we were just talking about. I'm keen on the long because I think the NASDAQ has given us I'm going to change this to clean. The NASDAQ has now given us the hold of the neckline just here. It managed to kind of get back inside that neckline after being below it for quite some time. The information is now known from the Fed, and the NASDAQ was able to put in a pretty bullish bar by Friday. That would suggest to me that there's some upside. S&P, same sort of thing. Now I'm looking at the FTSE 100 and saying that when the US market snivels or sneezes, the rest of the world gets a cold. And I still think that that's the case. And I still think that the FTSE is likely to do that if this can't hang on. There's the neckline on. There would be the right shoulder line on the S&P. I think that's got a little bit more upside. So I'm basing a lot of my opinion on the FTSE actually on what's going on across the globe. So I look at that. I look at the dollar, and I say the same as you've been saying, Jeff, that the dollar is potentially at a point of inflection, and if that's going to be the case, then it's probably around about here somewhere. Then that would drive that down and potentially again drive equities higher. But mainly, I look at the VIX, and I'm looking at the VIX, and I'm saying, well, the VIX to me looks like it has been up and down and up and down. And it is probably going to be coming back into an area looks like there's the trend line there, somewhere along there. And look at last week's bar on the VIX, completely opposite to the S&P. So this would suggest that we get just a little bit of calming down just for the week. We're not talking about anything longer term, but just for the week or potentially for the month before we hit that genuine rate hike. I still think there might be a few traders out there that say, we're not there yet. Let's squeeze the market for a little bit more before we start coming down. So that's why I've judged the sentiment to be bullish, mate, and that's what I'm currently trading. Not trying to get too much out of it. I'm going to continue to buy on the FTSE. I've put in an order to buy again long here. You can see that there's a pretty good support level here. So there's my next long, and all I'll do on that is I'll get in between the two levels, take the profit pretty much where we are now would be break even, and I'll take the profit just a little bit higher. So I won't be aiming for this. So that's currently the idea here.
Righto, happy days. I'm reading the market sentiment is exactly the same today, and it's only today because yesterday was different or Friday was different. Wax on, wax off. I think it's a little bit tenuous, frankly. And I'm not sure why we would be risk on, but today it appears that we may well be. And certainly we've seen that in my Aussie Yen trade, which is now out at break even, as I said. Righto, we do have a special guest in the room, and his name will remain anonymous, but his initials are Paul Bottrell, and I'm sure he's going to come and say good day in a sec. There he is. Good day, mate.
G'day, guys. How are we doing? Great.
Hi, mate.
How you doing?
Yeah, we're doing good, thanks.
Good, mate. Mate, I'm blaming the American market from what you just said. You said when the American market sneezes, the world gets the flu.
Yeah.
Well, I've got the flu, for gosh sake.
You've got the flu.
Oh no, that's no good. Is it definitely flu?
Well, I had a test today, mate, so I'll know tomorrow, I guess. But I think it's the flu. Yeah, my kids brought it home from daycare. I don't think it's anything more than that, mate. How about you, mate? You fully recovered?
Oh, totally recovered. Yeah, and this is the thing. The reason I asked that is that COVID feels like the flu. The first 2 days I was aching, but it didn't take long. I'd say the flu's worse probably than what I've got. Not that's not discarding how everybody else feels, but what I've got and the way it affected me, flu would be a lot worse. It was a couple of days of feeling a bit rough, but then through it and absolutely fine since then. I could have been down the roller disco on day 3.
Oh, that'd been worth watching. Yeah, mate, I get the impression that with COVID, there's some really different experiences going, even for those that with the same level of vaccination and that kind of stuff, right? Some seem to be an absolute breeze, some still seem to be tough.
I still don't want it, right? I still don't want to go out. Oh, I was out yesterday. We went and had, it was our anniversary yesterday. So I went and had lunch down on the wharf, and that was lovely. But I've still got this, don't really want to catch it.
No, you don't, mate.
Yeah, mate, I've got a kid who might be immunocompromised, so I'm pretty keen to keep out of the house as well. The only good thing, if I did have it, would mean that he's had it for a week and I've had it for a week and we're basically through it, so that'd be great. Well, it's been a while. It's hung around.
Glass half full. What's going on, mate?
Well, not a lot. I've been watching the show and really enjoying the show. I thought I might talk today a little bit, just really briefly, about what to do in difficult markets. And I think it's, Jeff, overall, these markets have been a little bit difficult, right? There have been some decent pullbacks in some products, right? Particularly if you're down in the crypto space at all, right? You're getting, what's Ethereum down 45%, Bitcoin 35%. Tough markets to do, right?
Yeah, it's interesting you say that as well, because as I was saying on Sunday, I've seen this time and time again with the FTSE, where it hits the level, everybody says, I'm bullish, I'm bearish, but actually you probably should be somewhere in between. But buy it when it comes down, lower again, maybe sell it at the highs, because we're in this range. And I wonder whether it's similar with things like Bitcoin and Ethereum, where we've hit the lower end of the range. We haven't picked up yet. But we might not be saying, we shouldn't be saying I'm bullish on this or I'm bearish on this, because they might all get a pop but come right back down again. So we might be floating here for a few months while we start to iron out what are the Fed genuinely going to do. Are they going to front load this thing? Are they going to stop at 4? Are they going to stop at 3? But I think the first 3 months of this year might be tricky to actually pick direction.
Do you know how we know that, Ash?
How do we know that?
We wait to the end of the year. We'll know that by then.
Oh, well.
Speaking about that, wasn't I?
But it's, but I think there's some things that just, as far as it goes, when markets are tough, what do you do? And I'm going to come to a pro action strength point at the end of this. But look, I just think if you're listening to this, and if you're in a market that's going your way, you want to trade often, you want to get down the time frames, and you want to get in the market whenever you can. And if you're in a market where you don't have a lot of confidence in, you want to get out to longer time frames, you want to trade less frequently, and you just want to reduce your involvement completely. And I think one of the things that, if you're a trader right now, you need to work out whether, so we've just heard you two and George just put 3 different analysis on the same chart, right?
Mm.
And it doesn't matter which one of those you've got. If you've got one, then get in the market and get into it. But if you're not clear, longer time frames, trade less often, reduce your risk, be conservative, or just go back to something that you know really, really well, right? Go back to something entry level, something beginner level, right? Can I share with you guys what would have happened if the Actions to Wealth guys had gone back to basics?
Yeah.
Please do.
Yeah, let me show you this. So I've gone back to the
trips today. I don't know why.
I'm just going to share some screen here. What was that? Sorry, Jeff?
I said we're down on trips today. All of our regulars seem to be having a day off.
Mate, it's Chinese New Year.
Of course it is.
Mate, it's a reunion dinner tonight. Family. Chinese New Year's tomorrow, but it's family dinners tonight. Yeah, sorry, mate. One of the reasons I thought I'd pop and do some stuff is because I'm going to nick your screen if that's okay, Ash.
Yeah, do it.
So, so you pop back. This is a analysis on the Wave Rider on a robot that's running at 1% risk every trade from the 1st of December to today. And the one that I've got up here is the hunting dog variation of it. Wave Rider hunting dog from the 1st of December to today. It's not going to quite 22%. Daily trades, stuff that you know, trade less often. If you're on the Falcon, it's not going to quite 28%. And
nice.
If you're on the Jaguar, 21% bank. That 21% open is actually not banked. It's only got 13% bank. There's some money floating around in that still. And look, it's great to see the Actions to Wealth strategy is doing really well when markets are. And I think it's one of the things, right? If you're new to crypto and the market gets dodgy, go back to what you know best. Go and trade some Forex, right? One of the things, Ash, isn't it? Where in good markets you can wander off and do a few different things, but when markets are tough, what do? You get back to the FTSE, right?
Yeah, totally, mate. Yeah, I think that's probably something that you learn through experience too, but very, very, very useful. Because you can sit there and become really frustrated and not really know what to do. But go back to basics, as you say. And if you've learned to trade currencies, then and in this particular fashion, perfect. Just go rules based, right?
Look, it's one of the things, isn't it, Ash, that one of the good things about currencies is that they're easier to make money on the way up and the way down.
Yeah.
Really, if you're a stocks trader, you should be trying to make money on the way up and trying to hang in on the way down. You're not trying to make money as an industry trader, trying because the shorts will come along and it will go down. But overall, you've got an inflation base that is going to go up, and you don't be stuck there. So it does give you a different look at it. And look, this is a strategy that we've just ripped to pieces. We're putting this back together on the 12th of February. We're going to have we've got 85 people registered to come and join us for this. We're going to put this thing back together. Even on the back of these results, we're going to make it better. And perhaps, again, I want to be really clear. These are solid introductory Forex traders. They're not making 20% over 2 months all day, every day, but they really have in this market. And I think I wonder what our people have been looking at, because I write the checks out. And I think that for the last 2 months, our guys have got stuck in Bitcoin. They've got stuck in Ethereum. They've got stuck in the NASDAQ. Some of them have bleed quite big money. They've lost as it's come down, they've lost their risk control, they've lost their composure, they've taken some really poor trades, and they've got smashed up for it. And this is part of the experience, right? Is that as an experienced trader, what do? Bigger time frames, trade less often, reduce your risk, take your time, and wait. And these are the best markets to learn to trade in.
Yeah, and I wonder whether maybe, you know, you saying that, is it possible as well? People maybe need a little bit of an arm round and a bit of a refresher to say, this is what you were doing. Don't worry about it. You've lost your way a bit. No big deal. This is what you were doing. Let's get back to this. Yeah, look, it's one of the reasons when I got people on the show that were down on numbers compared to normal, but I just thought I'd pop in and share it. It's purely because of that. You know, it's like, you know, anyone who's Maxims 12, who's watching this show, watches the recording, they know this strategy back to front, inside out. It is the absolute base level strategy, and keeping an involvement in those nice, simple strategies. I mean, really, all that's happened to make this happen is the US dollar's trended a little bit, you know, and because the US dollar's trended a little bit, you know, currency's been great, but this also meant that things like Bitcoin haven't been great, and it's this is one of the skills, right? I mean, you've got to be in the right market at the right time. You've got to be in the right size, and this comes with experience, right? Yeah, yeah.
It ain't rocket science, is it? And Paul, as a sports coach, you would, I think, one of the very first things you would do when your team loses their way is say, go back to basics.
Yeah, mate. Look,
get the basics right.
And I think the higher the level you're coaching, the more that comes back into play. Let's just go back and do the basics well and put together one nice and solid performance, because the thing that does in sport and in trading, that creates some confidence. What we've got, and when markets do this stuff, and not all markets are doing it, but what you get is you get people freaking out and losing their cool. And what they need is a nice solid week, but they just, you know, take 3 or 4 trades, come out at break even, get back under control, reset and start again. And, you know, coming back to basics is the key to all things. And look, if you're going to trade some of the stuff that our guys trade these days, you know, not on my accounts, you need to behave yourself on my accounts, but on your own accounts, if you're down trading shorter time frames, trading more often, trading, you know, some bigger risk, being more aggressive and big trends on some of this stuff, then good on you, right? There's huge money to be made doing that, right? But you've also got to understand when you get out, and that is tough because, you know, markets don't just go from trending up to trending down. They chop all over the place. And, you know, they're really easy to look back and go, it was pretty clear this was a lower high, but live, it's not quite so clear. And you've really got to have some composure and make good decisions. And look, all that trading is about making, staying calm and making repeatedly good decisions. And if you do that, you'll be fine, right? But you've got to think about those decisions, you know. Do I want to be in this market right now, and how exposed to it? In fact, in Bitcoin, for the first time, Ash, I'm doing a bit of what you do, to be honest. I've got longs and shorts, and I'm adjusting those to have a position. So I'm not just long or just short on Bitcoin like I have been for most of the last few years. I've got some longs and some short, and I'm adjusting those positions. So I've got a long bias or a short bias, more like a fund would trade it. I think it's the way in Bitcoin at the moment. If you like, you hedge one position, possibly that's, you know, but you need to make these decisions in a really calm manner. You know?
Yeah. Actually, I'm going to make a note for next Monday. Can we have a look at the Bitcoin chart and maybe even the Ethereum chart and see how closely related to the sentiment cycle that might be at the moment?
Yeah.
Have a look, mate. That Ethereum, mind you, Ash, boy, what happened to silver? That's a hell of a sell, isn't it? Is that a buy for you still? Is that a buy opportunity on the sell, or has it just gone too far?
Well, do you know, I think it's poignant that you picked that one up. It's definitely a buy for me. Definitely a buy for me for silver. But it is a spooky one. I mean, it's been a tough market, silver, because it just won't hold. It won't hold any decent levels. It just crashes back down. But it is a buy for me. And gold. Historically, as soon as the Fed raised their first interest rates, this is when we see the gold rally. Strangely, you know, I mean, you know, it's the inflation hedge, and maybe things are different. But I don't think you can refuse when something is such decent value relative to where it has been over the last, you know, few months prior to that. So I think building a position in gold and silver here is right.
Mate, if you're told an experienced trader 3 years ago that we could have 7% inflation in the US the possibility of Russia invading the Ukraine and gold going nowhere. I just wouldn't believe that, right? These are the situations where the world goes to gold. And it's interesting for me. I don't think this is too far off. It's weird because you went to gold because it was a safe haven. And now apparently you go to cryptocurrency because it's anything but. And I just don't understand how one replaced the other. It's like, there's a bit of trouble here. We'll just punt it. I can't see many funds doing that, to be honest.
No, I totally agree. I mean, I think the commodity space seems to be the place to currently be putting your money. When I look at the FTSE and the breakdown of the FTSE in itself, you can see where the money's going. Shell doing gangbusters yet again. BP doing gangbusters yet again. People have gone to those oil names. And interestingly, those gold mining stocks have not yet started to pick up. GLD last week, the gold ETF, had the biggest inflow of money coming into their fund in history ever.
I'm not gonna name him. You guys know who it is, but I can't name him because of his commercial position. But we've got Ainsley, who's a retail gold trader, but our largest institutional trader always tells me, go to gold miners first, go to gold second. You multiply your return on gold miners because gold goes up $2 off their price, and it's you get $2 on $20 as opposed to $2 on $1,800, and they do equate in the way up. So I like gold miners. It was interesting to bring that up. I might jump on the sharesies and increase my little gold miners position. To be fair, mate, it's a really interesting call, and it's one of the things that's really cool, Ash, is that, and Jeff, maybe it's just a nerd in me, but it's a fascinating market, isn't it? It's interesting. It's not the same.
It's very interesting.
No. This is there's Jeff and I have been talking for quite some time that something is going to break, and I wonder whether we've just seen the camel's back, have that one piece of straw kind of put on it, and it's just snapped a little bit. Because something's happened. Something's definitely happened. The dip buyers are not coming in with anywhere near the same confidence as they were before. In fact, they haven't really come in properly at all just yet. I think they might have a chance to push the market a little bit higher, but will they be able to hold it this time? And that's the big question. That's why it's interesting, because we're still in an inflection point. We still don't really know which way this is going.
And this is quite a slow turn, right?
But we have had some changes in the world. We do have a war pending. We do have interest rates about to go from, how long have we been in negative interest rates now? I can't remember, but quite a long time. We're just about to turn that corner. So it would appear. We're just coming out of a pandemic. What will perhaps, and this is where the perhapses are, I think, we haven't got interest rate rises, we haven't got a war, we haven't got the pandemic over and done with, but they're all teeter-tottering on the release, if you like. It's all just about to happen.
These should create the best Forex trends we've seen in 20 years. If you're going to have consistently different interest rate rises from different countries over the next 2 or 3 years, which seems inevitable, we should see Forex trends like we haven't seen for some time.
Yes. Yeah. I think you're right, mate, because the thing is that it's not about interest rate rises. It's about, can they control the inflation narrative with their tools? And if they can't, when they've put the interest rates up, then do they end up breaking the financial system because the financial system can't handle this much inflation, and then the Fed have to kind of go in hard, which is what people have been saying, which I can certainly concur with this. They go in early, and they go in hard, but they end up messing things up because they're so late into the party that they're going to have to lower them again. Have you seen the 30-year? The 30-year bond yield is not reflecting the Fed is going to hold this interest rate hike.
Mate, it's really interesting, right? This stuff can get all over the place. You and I could be here talking about this 5 hours from now. But the big thing for mine, right, is, mate, right now, which government does high inflation not suit?
Which government does high inflation not suit?
So let me ask you another question, right? if you're a government and you've just printed $100 million,
I'm sorry, there wouldn't be one, would there?
you've got to pay it back. Do you want to pay it back with your value currency at the
you mean
same
high
value as
interest,
when you
high
borrowed
interest
it?
rates? You mean high interest rates?
Inflation is the same thing, right? It reduces the value of the debt versus the value of the currency at that point.
Kind of, but you could always, you see, with inflation, you can kind of use it to your advantage by inflating away the debt. If you can sell things, yeah. But if they raise their interest rates, then well, it's not going to suit the US. That's for sure. I mean, they got how many trillions?
Well, look, if the US have got a huge amount of debt, right?
Yeah.
And inflation will help them inflate away the debt. If interest rates goes up, that'll affect them on new borrowing, right?
Yes.
But the existing borrowing will be fixed, won't it?
Don't know. Good question.
When they borrowed it off themselves, remember, they printed the money and they lent it to themselves. You know, they lent themselves at 0.25%, right? Whatever the hell it was, right? So the US, I don't think they care. And
yeah, I see what you're saying. But well, of course, we have to roll in the bond purchasing within that. Because if they're continuing to buy bonds from the US government, then those particular bonds will have a much higher value.
Got to presume that they're 80% through their borrowing, right?
Oh,
they can't borrow at the same rate, right? So,
no.
But now the focus goes, then this is historically what happens, right? This is and the big inflation spikes in the world follow the big borrowing spikes in the world. So, are they going to fight inflation? They're going to tell people like you and me they're fighting inflation. Are they really going to fight inflation? I have my doubts. I mean, let's be honest. Inflation's at 7% in the US. Not much fighting that, right? It can't get us to fighting that. That's a ridiculous number in the modern day world, right? They've got all the tools in the world to keep that down. And interesting, the Reserve Bank of New Zealand now has got all these other mandates. So a year ago, the Reserve Bank of New Zealand's job was to keep interest rates between 2 and 4%, same as every central bank, right? Now they're also responsible for inflation and house price inflation. How do you control house price inflation in New Zealand? That's just shambles.
Out of control, isn't it?
Oh, it's out of control.
I mean, you wouldn't want the job. That's the thing, I mean, who would want that job? Particularly now, but at least, do you know what? Actually, fair play to New Zealand because they went at a point where nobody else was going. That they've tried to get in front of it in some respects.
The other thing that New Zealand did was the bond, the Reserve Bank selling was done on a secondary market, so it can't be written off. So they didn't directly lend it to themselves so that we can be written off in the future, which is what, I personally think the banks would do. They'll just write all this debt off. You print the money, you lend it to yourself, you write it off and you move on, right? That's, I don't understand why. I just don't understand why you'd pay yourself back.
Well, China own a lot of the US debt. I mean, there'll be huge problems over there if that was to happen.
Look at, interesting question. I know we're rapidly running out of time.
Right. They printed it and they lent it to them.
To the US government?
Yeah.
Yeah, but they also they sell quite a lot of it overseas as well. Yeah, I mean it's I'll tell you, another area that won't handle it is the Eurozone. I mean, they will be broken. And we talked about...
Can the Eurozone handle anything? I've got to go because I've got some people waiting for me in a meeting. But I had a question for you, and it was an inflation question, and it's gone. I'm sorry, I guess it's gone. I had a question for you, but it has gone. If it's gone, I might have to go. Mates, mates, thank you very much for putting me on the show. I love coming on the show. One thing I'm trying to do is come in every Tuesday and Monday and Thursday and spend some time listening to you guys being part of your show. My lifestyle's just changed a little bit, and I want to go back to trading the UK Open.
Oh, brilliant.
I haven't done since I left London, but the kids are just gone to bed in New Zealand. So it's just a great time.
Nice.
So I've traded all kinds of different markets in different times. I want to get back to trading the UK Open. So I'm keen to spend a bit of time listening to you guys. I sort of transitioned.
Come on in.
Mate, I'm always around. You know that. Oh, I'm always around. Happy to have a chat.
You're in here.
I had a great question for you, actually. I can't think what it was, but
it's all right, mate. This won't go. This won't be going away.
I've got a question for you guys, right?
Yeah.
If we're heading to a long-term inflationary world, where should our money go?
Well, this is where I as again, mate. I mean, I'll go back to commodities. I'd say gold is the right place to be. I think oil is probably the right place to be. I know it looks elevated, but if energy is the biggest cost. So something, within the energy sector seems right to me. Something within metal seems right to me. So back to really things that you can touch, things that you make stuff with, would be the companies that I'd be looking at.
I like that, man. I think that's a really good call. It does make the Australian dollar look like a possibly good buy.
It does, and it makes the Nasdaq look like a good sell.
Yeah, look, it's hard to
not much different
Apple
from
surviving
that.
very well, or Tesla. I mean, you answer that's better than me, but pretty much everything on the Nasdaq, apart from the top 5, have been ruined, right?
Oh yeah,
and they've been ruined because they've got too much debt, and they've got nowhere near as much debt as the top 5. So at some stage, we should see some emptying out of this stuff. Right? We should see a far bigger correction to come on the Nasdaq. I would have thought at some stage, right?
Yeah, you definitely see that. Even though Apple still continue to innovate in a way which is, I mean, the thing is, they can buy all the companies they need to, but they do innovate in a way which is pretty amazing. And tech and how we fix the world's issues won't be going away without the use of tech. So tech will always be there.
Yeah, I think that's fair, mate. At the end of the day as well, no matter what goes on in the world, I mean, you only got to go to third world countries where people are starving and they still have iPhones. And that tells you that there's going to be demand for these phones no matter what happens in the world for some time. Got to go, guys. Been a great pleasure. See you guys soon. See you guys on Thursday.
Cheers.
Thanks for coming in, mate.
Have a good one.
See you later.
Cheers, bye.
Okay, we are just about there, Ash, I do believe. I'm going to very, very briefly have a look at the things that I've given already and just reiterate that I think pound yen is my pick for the week, but it's got to set up, of course, and anything that presents as a lower high in here on a daily chart makes sense to me. Cad Swiss to a lesser degree, but I'm still in that ballpark as well. Aussie dollar's got to pull back for me now before I get into it. I'm going to have to wait until the RBA have their say tomorrow. And if that's at all like 2024 is now come back to 2023 or even later this year, then I think the Aussie's going to rally its socks off very, very rapidly. So I want to be in that if I can. I think I'm probably out of luck for today, but if it comes back as a result, pardon me, of a whipsaw or something tomorrow on the RBA or before the RBA, I'll be after the RBA. But if the RBA do give that hint, then and we get any chance to get in here on a higher low, then I'm off like father's pants, frankly. Everything else is just in the background for me at the moment. Those are the three that I'm really concentrating on. How about you, bud?
Yeah, well, I mean, it's I think I've done the analysis on the FTSE, and it is basically that I'm going to be buying at specific points on the way down. I'm not convinced this market is done. I think the market goes higher from here. I think the Nasdaq goes up. I think the S&P goes up. I think the FTSE goes up. Subsequently, I suppose that would mean that I think the Aussie's going higher as well. So I think we might have a difficult day today, but I'm just going to be doing a little bit more buying and sensibly. And but I think Paul made quite a poignant point. Looking at the longer term timeframes, I'll probably spread those areas where I'm going to be buying out quite a way. I won't be just buying at sort of like little points as it comes down. I think I'm going to be spreading them out and seeing what happens. The range seems to be set to me. So, getting out of the top of the range is probably wise. But I probably won't sell it, though. But I think I'll take profit at the top of the range.
Happy days. Guys, have a wonderful week. It is a big week news-wise. Just be aware that there are big news events upcoming. 3 central banks will give their statements, and we need to be aware of those. I think we can take advantage of them if we have a good understanding of what they mean. So in particular, the RBA tomorrow, I think is very, very important for the Aussie dollar. We are at a very, very strong support level, and I'll be looking to support the Aussie if we get the right sentiment out of the RBA. We'll see how that pans out. Have a great week, Ash. Thanks for being my trading buddy. Thank you guys who have joined us today. I know we're very, very low on numbers. If you happen to be celebrating Chinese New Year, Gong Hei Fat Chai, and enjoy the festivities. Have a good week,
Good
mate.
luck.
Catch you Thursday.